Uh, Good morning, friends. So, what we are going to start now is we are going to start with a kind of revision as well as covering the additional questions which were there. If you look at the material which you would have used, we would have covered in the material these things. November 21, July 21 suggested answers, and November 21 mock test paper. Till this, we had covered as part of the regular videos which you would have seen. After this, ICI keeps coming out with new RTPs and new MTPs. So what I am covering now is May 2022 and November 2022 RTP, November 2021 suggested, May 2022 suggested, May 22 MTP as well. I'll cover this also. November 2022 MTP. So the objective of these classes is to cover these additional questions. When we are covering the additional questions, indirectly the revision will also happen. Indirectly the revision is going to happen as we cover the additional questions. So as you are aware, you are having totally 15 chapters. So in these 15 chapters, what I am going to cover here is only those additional questions and the chapters wherein additional questions are there. For example, materials chapter, I don't find any new question being there in these RTPs and MTPs. Our cost accounting system did not have any extra question. So wherever extra questions are there, we will cover all those extra questions. I am going to first start with budget and budgetary control. We're going to start with questions in budget and budgetary control. That's the area we will do. This is page 39. Let's start with this now. Chapter 15, budget and budgetary control. I'll start with question 1, which is on flexible budget. Maharatna Limited, a public sector undertaking, produces product A. Company is in process of preparing its revenue budget for the year 2022. Company has the following information which can be useful in preparing the budget. It has anticipated a 12% growth in volume from the year 2021 of 4,20,000 ton. Sale price is 23,000 per ton, which will be increased by 10% if the wholesale price index increases by 5%. To produce 1 ton of product A, 2.3 tons of raw material is required. Raw material cost is 4,500. Price of raw material will also increase by 10% if WPI increase by 5%. Increase in WPI is 4%. 6,000 employees works for the company. Company works 26 days in a month. 85% of the employees are permanent and getting salary as per a 5-year wage agreement. Earnings per man shift, that is an employee cost per shift of 8 hours is 3,000. New wage agreement will be implemented from 1st July 2022, and it's expected that a 15% increase in pay will be given. Casual employees are getting a daily wage of 850. It is linked to consumer price index. Present CPI is 165. It will become 173. Power cost is 42 lakh. 60% is used for production purpose. Remaining is for employee quarters. During the year 2021, company has paid 60 lakh for safety and maintenance work. The amount will increase in proportion to the volume of production. During the year 2021, company has paid 1,20,000 for the purchase of diesel to be used in car hired for administrative purpose. Cost of diesel will increase by 15%. During the year, the company has also paid 6 lakh for car hire charges. In year 2022, the company has decided to reimburse the diesel cost to the car rental company. Doing this will attract a 5% GST on reverse charge mechanism basis, for which company will not get any input credit. Depreciation is 80 crore 40 lakh and will be lower. Prepare a revenue budget and also show the budgeted profit or loss for the year. A very lengthy question, an excellent problem to revise flexible budget. Please go through the question. Go through the question. Excellent problem to revise your flexible budgets. Keep going through the question. An excellent problem on flexible budget. Okay, I'll start explaining this. A Maharatna Limited, a PSU, they want to prepare a budget for 2022. When I prepare 2022 budget, I'll along with that also prepare 2021. Why 2021 is the data of 2021 will help us in preparing 2022 data. There will be an increase in sale volume. Also, selling price will increase by 10% provided wholesale price index increase by 5%. What is wholesale price index? Is inflation. In the country, the inflation is measured through your price index. So, if wholesale price index increase by 5%, selling price will increase by 10%. They are saying increase in wholesale price index is only 4%, which means price will not go up. Price will not go up because the wholesale price index did not go up by more than 5%. If your wholesale price index increases by 5%, then selling price will increase. So we will start doing the question. Every point I read it, I'll start doing it. So let's start. Revenue
Sir,
budget. Sorry, yeah.
Krishnan sir asked you to record the session, sir.
Sorry.
Krishnan sir asked you to record the
Yeah, yeah.
session, sir.
I'm recording it. I'm recording it.
Thank you, sir.
Working note 1, revenue budget for the year 2022 and year 2021. Going to do it together. 2022 and 2021 for the year 2022 and 2021. Particulars 2022, or I'll write 2021 first and 2022 second. That's okay. Any order is fine. 2021 and 2020. Write along with me. In case any place you have doubt, please ask your doubts. Whenever there are confusion, doubts, please let me know at that time. Particulars in 2 years. 2021 and 2022. Point number one is sales, and I'm going to split this into two. Unit sold, selling price, value of sales. Unit sold, selling price, and value of sales. I'll do this table in lakhs. We can do it in crores or lakhs. I'll prefer to do it in lakhs. Units sold, selling price, and value of sales. How many units are sold in 2021? 2021 units sold figure. Please participate, guys. Friends. How many units are sold in 2021?
4,20,000.
4,20,000. Right, 4.2. 4,20,000. Next year, the units sold is going to increase by what percentage? What is the increase in units sold?
20%.
Not 20%.
12%, sir.
12%.
12%. 12%. Units sold will go up by 12%. Selling price remains same 23,000. Selling price is going to remain same 23,000, and value of sales is 96,600 lakhs and 108,192 lakhs. 96,600 lakhs and 1,08,192 lakhs. That is the amount of sales we are going to do. 96,600 and 108,192 amount of sales. Any doubts on this? Then I'll have to factor in the various costs which are there. So costs, less costs, multiple costs are there. We'll have to factor each of them. I'll go item by item. So as of now, we have given effect to point number 1, point number 2, point number 4. 1, 2 and 4 is used. Point number 3 is related to raw material cost. So raw material cost. In the cost, first cost is raw material cost. Quantity of raw material needed, price, value of raw material consumed, in bracket capital. Less cost, first is raw material. We'll go item by item. First we'll capture raw material, then we'll go to labor, then we'll go to overheads. We'll capture each of this. Just give me a minute. Okay. Coming to quantity of raw material needed, it says produce 1 ton of product A, 2.3 tons of raw material is needed. So for 1 unit, the input output ratio is 2.3 is to 1. 2.3 ton of raw material is needed to produce 1 ton of product A. Produce 1 ton of product A, I need 2.3 ton of raw material. Just give me. Okay, produce 1 ton, I need 2.3 tons. So units sold into 2.3 by 1. Units sold out into input by output ratio. Into input by output ratio 2.3 by 1. 2.3 divided by 1. Divided by 1. I'll need some 9,66,000 raw material. And 10,81,920. 10,81,920 units of raw material is needed. Units sold into 2.3 by 1. At any place you have a doubt, let me know. Price is 4,500 per ton. You multiply, you will get the value of raw material consumed. So the first one is raw material, which is 43,470 and 48,686. Let me know if there are any doubts here. If any place there is a doubt, please let me know. Okay. Second cost for us is, sorry, someone is unmuted. You have a doubt, let me know. Next is labor cost. Labor cost. Given effect to 0.1234. Point 1 is done, point 2 is done, point 3 is done, point 4 is done. Labor cost. Overall, I have 6,000 employee. They work for 26 days in a month. Totally 6,000 employees are there. They are going to work for 26 days in a month. At any place you have a doubt, let me know. If I make some calculation mistakes also, let me know, because I sometimes make mistakes. So you'll have to correct me. 85% are permanent. 85% is permanent means of the 6,000, 85% is 5,100 employees are permanent. These employees are getting a salary as per 5-year wage agreement. They are paid 3,000 rupees for every 8 hours. They are being paid 3,000 rupees for every 8 hours. The new wage agreement will be implemented from 1st July 2022. And in this, they are saying you are going to get a 15% increase in pay. That is, these employees will be paid 3,000 rupees for 8 hours from Jan 1, 2022 to June 30, 2022. From January 1 till June 30, you will pay 3,000. Beyond June 30, you will have to pay 3,450. Why 3,450? Extra 15%. You will have to pay extra 15% moment we cross July. So now right, permanent employees. Permanent employees. What is the salary for permanent employees? What is the calculation? Sorry, yeah.
Sir, units sold, why we are taking 42,000, sir, instead of 4 lakh 20?
Which one 42,000?
Sir, in sales units
No,
sold,
this
we are taking.
4.2 lakhs. That is not 42,000.
Okay, sir. Okay, sir.
Coming to permanent employees, 6,000 in that 5,100 is permanent employee. First, I'll do 2021 calculation, which is very simple. 5,100 employee. How 5,100? 6,000 into 85%. 6,000 into 85% is 5,100 employees. In this 5,100 employees, last year I paid them 3,000 rupees every day. I've paid 3,000 rupees every day. Every day. So listen, one employee calculation first I'll do. 3,000 per day. 3,000 per day into 26 days in a month. Into 26 days in a month. They're saying there are 26 working days here. 26 days in a month into 12 months. 3,000 into 26 days into 12 months. This is last year calculation for single employee, dividing this by 1 lakh. This is for one employee, okay? This calculation, I am doing it for one employee. Calculation is 3,000 rupees into 26 days into 12 months by 1 lakh. 1 lakh is to get it in lakhs. How many employees? 5,100 employees. This is last year calculation for permanent employee. This year, same calculation, it's only 6 months. Only for first 6 months, you'll pay 3,000. Next 6 months, you have to pay 3,450. Why 3,450? Extra 15%. Extra 15%. First, you paid 3,000 into 26 days into 6 months. Then you are paying 3,450 into 26 days into 6 months. 1 lakh divided by 1 lakh is to get it in lakhs into 5,100 employees. Write this. Please write this. Let me know if there are doubts in permanent employees. Let me know if there are doubts. If there are any doubts in this, please let me know. This is for the permanent employees part. Permanent employees part. In the solution, you will see the detailed calculation also. In class, I'm explaining it and I'm showing it here also. If there are doubts, let me know. I hope you have noted this. Anybody has a doubt, let me know, else I proceed ahead. I have casual employees. Similar calculation, casual employees, we are paying, the casual employees, we are paying daily wage of 850 rupees. We are paying 850 rupees only. So 850 into 26 days into 12 months divided by 1 lakh. We have 900 employees. We have only 900 employees. We don't have 5,100 employee now. It's only 900 employees are there. Casual. Casual is 900 employees. 850 into 26 into 12. 850 into 26 into 12. Divided by 1 lakh into 900. Okay. Now comes the another calculation. What they have done is next year I have to do the calculation and the wages is linked to consumer price index. That is for the casual employees, whatever I pay is depending on the again inflation. There is a wholesale price index and there is a consumer price index. So it's like this. 165.17 was the CPI, paid 850. 165.17 paid 850. If it is 173.59, how much you will pay? Do cross multiplication and tell me this number. Two decimal. Give me a two decimal number. 165 means 850. 173 means what number? Cross.
890.88.
Sorry, 8
98.88.
point.
93, sir.
Okay, let me do the calculation. I'm not able to hear it. Sorry.
Sir,
173.
893.33, sir.
893.33. This is what I need to pay. The employees will be paid as per the consumer price index. As per the consumer price index, they have said the casual employees are getting a daily wage of 850. Wages is linked to consumer price index. If CPI goes up, wages will go up. If CPI comes down, wages will go down. So 893.33. I am repeating the calculation here now. Instead of 850, I am going to write 893.33. 893.33. Let me know if you have any doubts here. 2508.47. This is for your casual employees. So first we have done raw material cost. Labor cost is done. Total labor cost in bracket capital B. We'll keep noting down every cost and then club them together. Capital B, labor cost. Material is done. Labor cost. So I think we have given effect to almost half of the question. 0.5 is given, 0.6 is given, 0.7 is also given. So till 0.7 we have done. Next is 0.8, which is on power cost. Let's do power cost. Power cost. Power cost, what they have mentioned is power cost was 42 lakh for 7 lakh units. 7 lakh units, 42 lakh means basically 6 rupees per unit. 6 rupees per unit. 60% power is used for production purpose. Remaining is used for employee quarters. So last year, I'll say power cost, production purpose, non-production purpose. Two purposes are there. Production and non-production purpose. Last year, 42 lakhs was incurred, 60% production, 42 in doing it in lakhs, 60% production, 40% non-production. Write the last year number. 60 and 40, 25.2 and 16.8. This is last year. 42 lakhs was incurred. Of the 42 lakhs, what we are doing is productive purpose and non-productive purpose. We are writing the breakup. This will continue to remain same. Is related to employees, all that nothing is changing. Related to employee part, there is no change. No change as far as the employees part is concerned, because they are saying 60% related to production. what will happen is related to production will go up. Why will it go? Because production went up. Listen, 42 into 60% is there. This will go up by 12%. Why will it go up by 12%? Because production went up by 12%. Production went up by 12%. This number will also go up by 12%. This number will also go up by 12%. Overall power cost. In number C, 42 lakhs and 45.024. Non-production purpose power is not going up. Only the production purpose power will go up. The reason is very simple, because what is happening here is production is going up by 12%. Non-production can also go up if they mention something. They're mentioning saying that your employee related cost will go up because of certain reasons. If they mention, we can follow it. Nothing is mentioned, then we cannot do it. Okay, so I've given effective 0.8 also. Next is very simple. Safety and maintenance cost is there. They are saying this will go up in proportion to production. In proportion to production. Next is safety and maintenance cost. Safety and maintenance. And number D. Every cost I'm numbering it. 60 lakh go up by 12%. 60 go up by 12%. Safety and maintenance will go up by 12%. From 60 lakh, it will increase by 12%. Next, during the year, company has paid 1,20,000 for the purchase of diesel to be used in car for administrative purpose. This cost will increase by 15% in year 2022. During the year, you'll have to read together. The company has paid 6 lakh for car hire charges. In 2022, the company has decided to reimburse the diesel cost to the car rental company. Doing this will attract 5% GST on reverse charge mechanism, on which the company will not get any input credit. Listen, in 2021, what we did is we paid 1,20,000 for diesel for car purpose. In 2022, I'll not pay for the diesel, because I am going to reimburse the cost of diesel to the car rental company. So the car rental company will incur the diesel cost. I am not going to incur it, but I'll have to reimburse it. So I'll have that calculation done, but it is not going to be incurred by, or it's not going to be a diesel cost for me. It is going to be something which I am going to reimburse. So listen, first we will write diesel cost. Diesel cost 6 lakh nil in this year. Point number E, diesel cost 6 lakh rupees is the diesel cost.
Sir, diesel cost 1,20,000.
Sorry, 1 lakh 20, 1.2. Diesel cost is 1.2, sorry. And payment to car hire company. Payment to car hire company. Payment to car hire company. I'll be paying 6 lakhs in 2021. Listen, 2020 is very critical. 6 plus 1.2. Sorry, just a minute. 1.2 plus 15%. Why plus 15% is diesel cost will increase by 15% in 2022. This entire 6 lakh and 1.38 lakh I am going to reimburse. But the problem is, when I do this reimburse, I have to pay extra 5% GST, on which no input credit. If you don't have input credit, it is your expenditure. So you are going to pay extra 5% and you are not going to get any input credit. So listen, payment to car hire companies 6 lakh, another 1.38 lakh into 1.05. Why into 1.05? Extra GST 5%. Extra GST 5%. 6 lakh you have to pay, 1.38 you have to pay. On this together you have to pay GST of 5%. GST of 5%. All put together I'll be paying 7.749. Payment to car hire 7.749. Diesel cost last year 1.2. This year would have been 1.38. Car hire last year 6. This year would have been 6 if I had incurred it. What I did is I am reimbursing, because of which extra 5% gone. Extra 5% has gone in the reimbursement process. In the reimbursement, extra 5% has gone. Yep. Past expenditure depreciation. Depreciation. Last year was 8040 lakhs. We are doing it in lakhs. This year 15% lesser. 8040, 15% lesser. Now you can put a total of all expenses. I'll give you some 2 minutes. Cost. Add all of this. And profit. Profit is sales minus cost. Profit is sales minus cost. We are doing it in lakhs. Profit is sales minus cost. Add all the expenses and get the profit figure. You do the calculation. I'll also get a minute rest in that. So you do the calculation. Do the calculation. Do let me know if there's any calculation errors. Sometimes it keeps happening. So if I have missed out on something like that car example where I took 1.6 whereas it was 1. Any place if there's an error, please do highlight. Profit or losses. I think loss in both the years. It is loss in both the years. 2021 was not asked in the question, but I did it so that I can complete 2022. If any doubts are there, please let me know. Okay. I assume all are done. I'll proceed ahead to the second question. If anyone is doing any doubts in this, let me know. I'll wait. Anybody needs any explanation? It's an excellent problem. Our answer is also matching. So anywhere there is a doubt, let me know. I'll wait else I proceed ahead now. Anybody has any doubts? Okay, let's proceed to question. F Limited requires you to prepare the master budget for the next year from the following information: sales 1 crore 20, direct material cost, direct wages, factory overheads, indirect labor, works manager, foreman, stores and spares, depreciation, light and power, repairs and maintenance, other sundries, administration expense. Now, first you go through this and I'll explain them. Okay, master budget is nothing but a budget for the entire company. You can prepare department wise budget, you can prepare budget for the entire company. Now, what we can do is we can prepare this budget which will give us the profit or loss for the year. So, we are going to prepare it in the cost sheet format only because cost sheet is going to cover everything. So, master budget of F Limited, master budget of F Limited, master budget of F Limited for year ended. Okay, they have not given the year. Particulars calculation amount. Particulars calculation amount. First is direct material. This is a very simple question. We're going to do it in the format of cost sheet, not exactly following all classification and all. Direct material, 60% of sales. 60% of sales. So 1 crore 20 lakh into 60% into 60%. 72 lakhs. Direct material 72 lakhs. 1 crore 20 lakh into 60%. 1 crore 20 lakh into 60%. Direct wages 20 workers 2250 per month into 12 months. 20 workers 2250. They're doing for a year. The budget can also even be prepared for a month also. You'll have to keep looking at every data point properly. 20 into 2250 into direct expenses 0, get time cost. Direct expenses 0, time cost. It's not necessary even to write prime cost, okay, because it's not that you're required to follow exactly the format of cost sheet. It's not the requirement here. Master budget is basically a budget for the entire company which should give me the overall profit or loss of the company. So prime cost is 77 lakh 40,000. Prime cost is 77 lakh 40,000. Factory overheads. I think major chunk of the items are factory overheads there. Any items in factory overheads are there. Indirect labor works manager. Indirect labor works manager 7,500 into 12 months. Works manager 7,500 into 12. Indirect labor, foreman. If there is any place where explanation is needed, I'll give you. These are fairly simple adjustment. Force and spares, 2.5% into sales. Lakh. Depreciation, 1,89,000. Depreciation, 189. Light and power, I assume it's related to factory. Light and power, 45,000. Repairs and maintenance, 1,20,000. Repairs and maintenance, 1,20,000. Repairs and maintenance, 1,20,000. Other sundries. Sundry means miscellaneous expenses. 10% of wages. Wages you have already calculated, 5,40,000. So 10% into 5,40,000. 10% into 5,40,000. Administration will write it below. So total factory overhead. Factory overhead. Adding up all of this, you get 8,70,000. Total factory overhead is 8,70,000. Let me know if there are any doubts here. All put together is 8,70,000. This will give me gross works cost, net works cost, COP, COGS. We don't have opening work in progress, closing work in progress, opening FG, closing FG. None of them are there. So 86,10,000. 86, admin selling and distribution. Admin selling and distribution, 5,40,000. Cost of sales, profit and sales. Cost of sales, profit and sales. Very simple kind of a computation. Sales was 1 crore 20 lakhs. Profit balancing figure. Let me know if there are any doubts. Profit is balancing figure. Profit is 28 lakh 50. This is net profit. The master budget, I can also give gross profit. What is gross profit? Is sales minus COGS. In the master budget, we can also calculate gross profit. Sales minus COGS. Sales minus cost of goods sold. Sales minus cost of goods sold. I can calculate two items. I can calculate two items. Sales minus COGS. NP and GP both can be computed. I hope this is clear. I'll proceed ahead. This is clear. Anybody has a doubt, let me know. Okay, we'll move to the third question then. Profit and gross profit. Yeah, as I said, both can be calculated. Profit can be calculated and GP can be calculated. Go through question 3, you read through this. It involves somewhere your marginal costing also. In marginal costing, we did an area called limiting factor. So somewhere that will also come in this question. Go through the question. Slightly lengthier problem. First go through the question and then I start explaining it. Going through the question. Problem 1 was an excellent question. Problem 2 is a fairly simple kind of a question. 3 is also a very good problem because it links marginal costing also. It brings concept of marginal costing as well. Okay, I'll start discussing this. SR Limited is a manufacturer of garments. For the first 3 months of next year, production will be constrained by direct labor. Constrained means limiting factor. You don't have adequate direct labor. Only 12,000 hours will be available every month. For market reason, production of either of the two garments must be at least 25% of the production of the other. There are two types of garments. You have shirts and shorts. What they are saying is, see what happens in limiting factor is you decide which is more profitable product and prioritizing producing that product, and then only you prioritize. You do ranking. There's something called as a statement of ranking. You would have seen this in marginal costing. So using that statement of ranking, you decide which is the better product and accordingly focus more on that product. Our focus would be more on the rank one product. Whichever is the rank one product, we prioritize manufacturing that product. Now here what is happening is, in this question they are mentioning that 12,000 hours of direct labor hours is available, and according to the policy of the company, if you are manufacturing shirts or shorts, these are the two things you can manufacture. If you focus more on shirts, shorts should at least be 25%. That is, if I'll call it as A and B because both the names are very common, shirt and short, will get confused. If you produce A, B should at least be 25% of A. And if you are focusing on B, A should at least be 25%. Estimated cost and revenue is given: sales price, raw material, dyes, direct labor, fixed overhead, profit. For the month of July, from the month of 2020 to July 2022, no constraint. At that time, I want to sell 15,000 shirts, 20,000 shorts. So when I go to July, I don't have a problem. First 3 months alone, there is an issue. Sales will grow at 10% per month. Company wants to carry a closing stock which is sufficient to meet 40% of the next month's sale. Estimated selling price will be same. Calculate the number of shirts and shorts to be produced per month. How many shirts and how many shorts should we produce every month? Every month, in order to maximize the company's profit. So first 3 months we are required to do limiting factor analysis. See, basic thing is in the first 3 months I need to see whether should I prioritize on shirts manufacturing or should I prioritize on shorts manufacturing, that is product A or product B. For that, first I'll have to do something called as a statement of ranking. In the ranking step you will understand which is more profitable product. More profitable is rank 1, lesser profitable is rank 2. So let's start. Statement of ranking. Statement of ranking plus shirts and shorts for ranking step. I need to calculate contribution per unit of limiting factor. Contribution per unit of limiting factor. Selling price less, let's write the format, variable cost, contribution per unit, labor hours per unit because labor is a limiting factor, and contribution per labor hour. Contribution per labor hour. This will tell me which is more priority. Is it shirts or is it shorts? Which is more profitable? Selling price less variable cost, contribution per unit, labor hours per unit, contribution per labor hour, and ranking. Selling price is 60 and 44. 60 and 44. Variable cost is 24 plus 6 rupees plus 8 rupees. Fixed overhead alone will not come. 24 plus 6 plus 8. 8 rupees. 20 rupees. Why we do statement of ranking? We learnt in marginal costing. So ranking will tell us which is more profitable. Contribution per unit 22, 24. Contribution per unit is 22 and 24. Why labor hour per unit? Because our limiting factor is labor hour, constrained by direct labor hour. It says 8 per hour. If it's 8 rupees, this is 1 hour. And if it's 4 rupees, it is half an hour. 0.5 hour. That is direct labor at 8 per hour. 8 per hour. 8 and 4 is mentioned. 8 rupees means 1 hour. 4 rupees means basically half hour. 0.5 into 8 is 4 rupees. 1 and 0.5. Labor hours per unit is 1 and 0.5. 1 and 0.5 is using 1 hour we earn 22 rupees in shirts. Using half hour we earn 24. So contribution per labor hour is this divided by number of hours. Divided by number of hours. So this is rank 1 and this is rank 2. Thus my priority would be to manufacture shorts. Second priority shirts. The first priority is to go for shorts manufacturing. Second priority is to go for shirts manufacturing. Yep. Working note, computation of number of units be manufactured. Number of units to be manufactured. Just give me a minute. Number of units to be manufactured. Now listen. Let us assume the number of units, right? Let us assume the number of units of shirts and shorts be X and Y. Number of units of shirts and shorts to be X and Y. Shirts and shorts to be X and Y. Now listen, my priority is to manufacture shorts, which means the number of shirts will be 25% of shorts. That is, your priority is to produce Y, but X will at least be 25% of Y, because at least 25% of the other. At least 25% of the other. So number of shorts manufactured is equal to Y. Number of shirts manufactured is equal to 0.25y, 25% of the other product. 25% of the other product. Shorts you will manufacture Y. Shirts is 25% of the other product. 25% of the other product. So net it is like this. Produce one shirt, you need 1 hour. How many units I am going to manufacture? 0.25y. 1 hour into 0.25y. Need 1 hour to produce a unit, and I am going to produce 0.25y plus 0.5r. Second product you take only 0.5r. Second product only 0.5r. Here you will manufacture y units. Here you will manufacture y units. First product 1 hour into 0.25y. Second product 0.5r into y units. We have decided shorts is our priority, that is y. Shirts is our second priority, which is 25% of y, which is 25%. This is equal to 12,000 hours. This is equal to 12,000 hours. So 0.25y plus 0.5y is equal to 12,000. Is equal to 12,000. Y is equal to 12,000 divided by 0.75. How many units? 12,000 by 0.75. How many units?
16,000.
15,000.
16,000 shorts. We'll be manufacturing 16,000 shorts. 16,000 shorts would be manufactured by us. And shirts manufactured is 16,000 into 0.25. 4,000 shirts. This is what I will do every month. 16,000 shorts and 4,000 shirts if I have labor constraint. If there is a problem with labor availability, we'll have to do 16,000 and 4,000. 16,000 and 4,000. Labor availability problem is there. So our optimum plan is 16,000 shorts and 4,000 shirts. Any doubts on this? This answers part 1 of the question. Calculate the number. They just asked the number, so I'm not doing a profit statement. Calculate the number of shirts and shorts to be produced per month in the first quarter. Per month they wanted, so we have calculated per month. Next they've asked for budget. Sales budget showing units and revenue for each product. Which month? July, August and September. So let's do a sales budget. Sales budget for July, August and September 2022. Sales budget for 3 months. We'll do product wise. They've asked for each product. Particulars. July will have 2 sub columns. July will have 2 sub columns. Shirts, shorts. August will have two subcolumns, and September will have two subcolumns. I'll create the format and give it to you. You should be in a position to do because there is data in the question. There is data in the problem for you to do. I'll create the format and give you. Wait for some 2 minutes. You should be in a position to do. Units sold, selling price, value of sales. Question has the data. Please factor that and do this. Units sold, selling price, and value of sales. Units sold is they have given directly for July. Company, because after July there is no limiting factor. They have mentioned 15,000, 20,000 directly given 15,000, and this will grow by 10% every month. It will grow by 10% per month. So then it will become 1.1 into 1.1 into 1.1 into 1.1. The rate will keep going up from 15,000, 10% up, 10% up, 20,000, 10% up, 10% up. Selling prices, selling price will remain same 60 and 44. 60 and 44, and value of sales, unit sold into selling price. Unit sold into selling price. Let me know if there are any doubts here. Unit sold into selling price. 9 lakh became 9 lakh 90, 9 lakh 90 became 10 lakh 89. 8 lakh 80 became 9 lakh 68, 9 lakh 68 became 1064 800. This is for the sales budget. This is on the sales budget. Apart from sales budget, the question has also asked for production budget in units for each product. So production budget is sales, add closing stock, less opening stock will give you production. Just the units are needed. Value is not possible because for value I need the cost price. Production budget for July, August, and September 2022. Start with units sold, particulars 3 months with 2 subcolumns each. Please write units sold, sales plus closing stock less opening stock is production. Sales plus closing stock less opening stock is production. Units sold, add closing stock less opening stock and we get production. Add closing less opening and we get production. Sales, add closing stock less opening stock and you get the production figure. You get the production figure. Closing stock is, they're saying, company maintains a stock which is sufficient to meet 40% of the next month's sale. Sufficient to meet 40% of the next month's sale. Closing stock of July is 40% of August sales. Closing stock of July is 40% of August. 40% of August. Same 40% of August. Closing stock is 40% of next month sales. Percent of next month sales. Just give me 40% of next month sales. September is again 40% of next month sales. August is basically 40% of September month sales. Okay. For September, I'll need October sales. September, I'll need October sales. October sales is going to be extra 10%. Extra 10%. October sales is extra 10%. Stock is 40% of this. 40% of this. 40% of this. 40% of next month sales. Closing stock becomes opening stock. July opening stock, we are stuck as of now. Closing stock will become opening stock of next month. Closing stock will become opening stock of next month. Any idea what will be the opening stock of July? How can I calculate it? What should be the opening stock of July? How do I calculate this? Opening stock of July.
So in the question they have given there is no,
Sorry,
in the question they have given there is no opening stock.
is it mentioned? Sorry, okay, I didn't see that. There's no opening stock at the beginning of July. Sorry, then 0. Assume this line was not there, no? Opening stock of July is closing stock of June, and June closing stock is equal to 40% of July sales. The June's closing stock will be 40% of July sales. So in this question, they have mentioned there's no opening stock, so we have kind of done now. This will be the production figure. This will be the production figure. Only the units have been asked. Okay. With this, questions on budgetary control is over.